Welcome to Spasha YouTube channel. Subscribe our channel. Not only subscribe, share to other people. You get the more information and knowledge. So today we are going to discuss about the mutual fund. It is under investment plan. There is one beautiful concept, mutual fund. So to give the proper information and knowledge, we have in our studio. That is Mr. Robin Vass. He is a personal investment service professional and he has given more information knowledge about the investment plan. So today we are going to discuss about the mutual fund. Sir, welcome you, sir.
Thank you.
So first question is, what is mutual fund, or is there any meaning of mutual fund?
Yes, mutual fund is a way to invest in the equity markets.
Okay.
So equity market or a share market, what we can say.
Okay.
There are two ways of investing in that.
Okay.
You can directly invest into that. Like if you are able to understand the market,
Okay.
then you can definitely do it.
Okay.
But for that, you have to do a lot of research.
Okay.
You need to have a deeper understanding of the companies, what kind of business is that, who are their competitors.
Okay.
Because you're investing for not for today or tomorrow. You're investing for a longer time generally.
Okay.
Because it's a business, right?
Business.
So you need to have a deeper knowledge of that.
Okay.
If you can do that, definitely you can directly invest into that.
Okay.
But there, what happens is you need a huge sum of money also
Okay.
to invest.
Okay.
But for a common person,
Okay.
it may not be so convenient
Okay.
to study that, and you may not have that knowledge, or you may not have that time, or even that kind of a money.
Okay.
But to get advantage of the equity market,
Okay.
there is a way he can invest through a mutual fund.
Mutual fund.
So in mutual fund, what happens is there is asset management company,
Okay.
and in that company there is a fund manager,
Okay.
and there is a research team
Okay.
who do the research. They analyze the different shares, companies, and all. Then they invest in those shares. So
Okay.
what they do is they take money from the investors,
Okay.
they pull in the money from the investors,
Okay.
and they invest that money into those kind of shares.
Okay.
So for a common man here, if he wants to invest, he doesn't have to worry about which company or how it's going to do in future. So he doesn't have to go in detail with that. He has to just select a particular scheme which suits his investment objective,
Okay.
and accordingly he can invest. So here he has got the help of this expert, and these experts will do the investment part.
Okay.
So for a common investor, mutual fund is a way to get into the equity investments without much hassle of doing those things.
Okay.
Yes.
Now the different types of mutual fund based on various categories where the person can invest in that.
Yeah, in mutual fund there are types, definitely. Broader classification, if I would like to say, is one is equity mutual fund.
Okay.
That is, your money through these funds is going into the share market.
Okay.
Another one is a debt mutual fund.
Okay.
Now, debt mutual fund is somewhere your money is earning interest.
Okay.
Like if you keep money in the bank, so you're getting some interest. And
Yes.
how do you get the interest? Because these bank people, they will lend the loan, and from the loan they get some interest, and they keep a portion of it, and the remaining they pass on to you as an interest, right? So here also, for government, for companies, they need some money for their activities.
Okay.
And for that, they take money from the public.
Okay.
So they take loan from the public. So they do it by means of releasing the bonds. We say government bonds, corporate bonds, money market instruments.
Okay.
So when you are investing in a debt mutual fund, your money is going into those kind of instruments where you are getting interest out of that.
Okay.
So if you are thinking of parking your money for some time,
Okay.
you're not thinking of beating inflation, generally you want to keep some money or from short-term income, then yes, debt mutual fund is a way. Even for an emergency fund also, debt mutual fund could be a great way.
Okay.
But if you are thinking of creating wealth over a long time, then these equity mutual funds are better.
Okay.
Then if we further go into the classification, equity mutual funds, we have large caps, mid caps, small caps, then we have flexi caps, hybrid equity. There are a lot of kind of funds. On in the debt funds also we have liquid funds, ultra short term, mid term. So there are different types of schemes available.
Okay. So in further, if we get a chance in further episode, we can discuss about the mid cap and the small cap and all. So today may not be discuss about this, but just a mutual fund.
Yeah.
So how to invest in mutual fund, like a SIP and lump sum you say account, okay? So how to invest amount in mutual fund?
Yes, for investing in a mutual fund, as you already mentioned, there are two ways basically. One is a lump sum investment. Another one is a SIP, or what we say systematic investment plan. So lump sum, suppose you have some money with you readily available, and you want to invest at a single shot.
Okay.
Then that's called lump sum investment.
Okay.
But lump sum investment mostly suits debt mutual funds, because in debt mutual funds you are getting some interest there, and for the capital amount you may not have the risk as you have in an equity fund.
Okay.
Yeah, there is some risk. There is a credit risk, interest risk, and all, but comparatively it is safer.
Okay.
So there you can do the lump sum investment.
Okay.
But when it comes to a equity mutual fund,
Okay.
every time may not be suitable for a lump sum investment.
Okay.
For example, if you put the lump sum investment there,
Okay.
and then maybe next second year or third year market goes down,
Okay.
then your money will be on the lower side. For example, you invested 1 lakh
Okay.
and the market went down, and you may be left with the 70,000 or 80,000 that way. And to wait till the market comes back, it may take some years, 2 years, 3 years, we don't know, 4 years, and it's very difficult to wait also, because see, if the market drops from, let's say the market was at 10,000 and it dropped by 50%. So now the market is at 5,000 points.
Okay.
Right? So whatever you invested, let's say you invested 10,000, now it is 5,000.
Okay.
Straight away 50% drop.
Okay.
Now, again to come back to that 10,000,
Okay.
this market has to go up by not 50%, by 100%.
100%. Okay.
Because if the market goes 50% up from 5,000, it is only 7,500.
Okay.
Only if it raises by 100%, then you are back at 10,000. So you are just back at 10,000. You are not made any profit there.
Okay.
Right? And after that, again, if it goes up further, then you are making money.
Okay.
So it's a very difficult thing to invest and then wait for these losses to take in those losses. So best way is to invest through SIP.
SIP.
That's a systematic investment plan.
Okay.
So here what happens is you are not investing in a single shot, but you are doing the regular investments.
Okay.
So generally we go for monthly investments, because normally people earn monthly income. Then it's very easy to budget.
Okay.
And you give a particular date, and on that particular date your money goes into the investment.
Okay.
So in this way there is a huge advantage.
Okay.
Here you don't have to worry about the market. Now I'm investing, is the market up or down? Is it the right time? You don't have to worry about that.
Okay.
So here what happens is, by default, as you go on investing, sometimes you may get the higher market, sometimes you may get the lower market.
Okay.
But without thinking about it, it happens automatically.
Okay.
So here, when you invest, definitely lower markets are good.
Okay.
Because in lower market what happens, you are investing the same amount of money,
Okay.
but you are getting more units for that. In mutual funds we call them units.
Okay.
As you call in shares, you say share market, you say shares, right? So here we say units.
Okay.
So ultimately when you withdraw the money, that time what matters is that how many units you have.
Okay.
So if you have maximum number of units, that is beneficial for you.
Okay.
So the whole exercise is about collecting more units.
Okay.
And that is easily done through a SIP. Because by average, by its default design, sometimes you'll get the lower market and you are getting more units. Sometimes upper market, yes, but no need to worry about that, because of this your purchasing price of every unit also comes down. You are getting at the average price. The average happens. So you are getting the units at lesser price, and you are able to accumulate more units.
Okay.
So that's a wonderful thing. So for a common investor who doesn't need to worry about these things, if he goes through a SIP. So it's a wonderful tool to invest in a mutual fund.
So what is the main advantage or benefits of mutual fund?
Benefits of mutual fund is that mutual fund gives you an opportunity to get into the equity markets.
Okay.
So which otherwise may not have been possible for many of the investors, because of the lack of knowledge, because of the lack of money, all these things. So here, even with a very small amount, like even some schemes are there, even with 500 you can start investing in those. So 500 means anybody can afford that. So even for a common investor, he can think of building a secure future by investing through a mutual fund. And since by default mutual fund, this equity mutual fund is investing in equity markets, so you can think of beating the inflation also on the long term. So definitely it's a wonderful tool in the hand of a common investor.
So related to SIP or related to a mutual fund, in case of a death of a person, what is the next procedure?
In case of death of a person, see, there is always a nominee. Generally when you invest in a mutual fund, you have to mention the nominee You have to mention the nominee's name, age, and everything.
Okay.
Yeah, if you do not want to have a nominee for investments, then you have to explicitly declare that in the form. You have to sign separately.
Okay.
So generally, you will have a nominee. So what once the person expires, what the nominee has to do is the nominee has to approach the investment company, mutual fund company, with the proper documents, a death certificate, and all. Then KYC of the nominee has to be done. Because the present money is in the name of the investor. And that money can come back only to the investor's bank account. Now it cannot straight away come to the nominee's bank account. So that is why here account has to be opened in a mutual fund in the nominee's name. That is why KYC has to be done. So once the KYC is done, then the whatever the folio that investor has, that get transferred to the nominee's name. So in her name there will be in her or his name there will be a portfolio. And after that, if the nominee wishes, money can be brought back to her or his bank. Or if the nominee wishes, they can continue the investment also.
There is a procedure like to continue the investment?
Yes, definitely. They can continue if they want. They can do that.
Now earlier we were speaking about the SIP. Now can you tell me SIP and SWP? Means SWP, there is one more thing, right? Can you explain that?
Yes. Now SWP is systematic withdrawal plan. Where SIP is systematic investment plan. So SWP is a complete reverse of what is SIP. So through SIP we are investing. Through SWP we are withdrawing. So when you withdraw, once again you have two options. You can withdraw at one shot, full amount you can withdraw at one shot. But there is a, suppose there is a person who needs a monthly income. He's retired and he needs a regular income, maybe on monthly basis. Then for him SWP works out fine. Because the money is there in the mutual fund and you can invest in such a style so that amount can keep growing with the growth of the mutual fund. Whereas for his needs, month on month that money can come into his account. So he has to specify a date and how much amount he needs per month. And this is what is SWP, systematic withdrawal.
See, if you see about the life insurance, we cannot withdraw it in between. So you have to fulfill the terms.
Correct.
But whereas like in mutual fund, we can withdraw it in emergency. Like means in case of emergency, can you withdraw the money?
Yes, definitely. That is why, see, mutual fund is very flexible. Now, when you talk about the insurance product, life insurance product, there are a lot of rigid rules there. Like once you have a fixed term, you cannot withdraw in between. If you withdraw, there will be charges on you, and all these things would be there. But in a mutual fund, it's very flexible. So you can plan depending on your present situation. And in future, now nobody knows the future, what is going to happen, right? So if there are some changes, accordingly you can adapt to this plan. You can change some things here. Like in a mutual fund, you can increase also, you can decrease also, you can stop. And if there is a real emergency where he has to withdraw the money, then he can also do that very comfortably. So there are no restrictions on that, which in a life insurance product actually you cannot do that. But actually we will not advise to withdraw the money unnecessarily, because here the discipline and sticking to the plan is very important because for the financial future. That is why we recommend emergency fund separately. So that if there is an emergency, you can dig into the emergency fund. So you can leave these things for the future as it is. But yes, if there is such a huge emergency where the emergency fund is also over, then there is a life and death situation, then definitely nobody will stop you from withdrawing the money from the mutual fund. Yes.
Is it necessary that the mediator person is required to process the mutual fund?
Here there are two ways. Once again, if you think that you can understand all the schemes and their investment objectives, then you can straight away directly, it's called direct investment, you can do that in a mutual fund without the help of any intermediary in between. See, there are actually almost 144 mutual fund houses, and each fund house will run around 25 to 30 schemes on their own average. So that means around 1,500 schemes here and there in total will be there. So if that person is well knowledgeable, he can understand each product and he can select a product for his needs, then definitely he can do it direct. That's possible. Otherwise, there is another option. You have to go through an intermediary.
Okay.
There are two kinds of intermediaries. So one is mutual fund distributor, is one category. There are RIAs, registered investment advisors. You can go through them. So any of the intermediaries, you can get into these things. So if you think you need a help to understand your situation and match the instrument with that, so that you're not going to make any mistakes, because here mistakes could be costly because as I already said, time is a fertilizer here. So what happens is, if you do some mistakes and lose money and also lose time with that, then you may not get that much time required again to rebuild that thing. So here it's better not to make a mistake. So you can definitely take help of the intermediary, so who can really understand your situation and suggest the product accordingly.
Means you mean to say that with a proper guidance you have to invest it.
Definitely. Likewise, we go to the doctor, right? So for self-medication and taking medicine with the help of a doctor, there is a huge difference. Right? So some medicines may backfire, it may not suit you, right? So there could be a harm. So the same way it applies here also.
So at the end, what is your opinion about the mutual fund?
For me, it's a wonderful instrument in the hands of a common investor. See, the people who have great wealth, they are always wealthy. But normally people like a middle class people or a lower middle class or a poor people, what is the opportunity for them? Now this mutual fund is a great opportunity, because even with a very small amount you can start building your wealth. And that is why I would say mutual fund is suitable for everyone. Mutual fund sahi hai, as they say. So every person should try to understand this, or maybe with the professional help they get into the mutual fund investment with the proper planning, and thus they can create a very beautiful and secure financial future.
So thank you, sir, for being with us and giving us this beautiful episode about the mutual fund. In the next episode, we'll learn about the mid cap and small cap. So we'll sign out this episode. Thank you so much. Share this, subscribe our channel, share to other people, so you get the more information and knowledge. Thank you.